Good morning, Steve here in Chicago with the morning grain comments. We have mixed trade overnight and not a lot of change in the news, not a lot of volume. And so the markets, I think, in general are waiting to see what happens over the next 2 to 3 weeks as far as U.S. Midwest weather is concerned. And also gearing up for the USDA World Outlook Board August crop report. We've got beans up about a nickel, while meal is gaining on soybean oil. Corn is down anywhere from 2 to 3 cents, while wheat's up anywhere from 4 to 7 cents. Outside markets, stocks are mixed before some of the earnings reports, and also the Fed chairman comments today. We also see the dollar lower, crude lower, and gold a little bit higher. As far as the fundamentals and the grains are concerned, we're still focused on weather. Does not look like a lot of rain for Canada, the Northern Plains, or the Pacific Northwest. There are showers in eastern Nebraska today that will be moving into parts of southern and eastern Iowa and eventually northern Illinois. After these rains, it looks like we're gradually going to warm up with temperatures near 100 degrees in parts of North Dakota and Minnesota late next week. There's also net drying for most of Minnesota, Iowa, the Dakotas, and Canada prairies, and the Pacific Northwest. NASS did bring down the spring wheat and durum crop numbers, and equal drop percentage-wise in Canada would lower their wheat crop to 21 million tons from 31.5, and their canola crop to 16, maybe even lower, versus what World Board is using right now at 21.2. So higher canola prices worldwide is offering support underneath the bean and soybean oil complex. Also weather-wise, it looks like parts of Europe are wet. It's delaying harvest, raising some concern about quality, but the forecast is for them to dry out. I guess the only place that in that area that people are concerned about is Western Russia, and crops are declining there. Ukraine is hot and dry, but again, their soil situation is much better than Russia, and we believe this is only a temporary weather phenomenon. As far as export demand, we believe that World Outlook Board has somewhere around 27 million tons of corn exports July through September out of South America. That number could be 10 million tons or 400 million bushels too high. So the key is, will that demand move to the U.S., even though U.S. prices are higher than South America? On the bean complex, I think the biggest thing is if this drier, warmer trend over the next 2 weeks for the Midwest extends in August, then the soybean yield here is probably going to drop below 50 bushels per acre. And so you've got good crops in the east, but maybe you'll see some stress in the Dakotas, Minnesota, and parts of Iowa down the road. I still think that the market needs to put a little bit more weather premium in it than it has now. Testing maybe $14 in the beans, trading over the 550, maybe getting closer to 570, 580 in corn, maybe trading over 650 in the wheat, and 9 to 950 in the Minneapolis wheat. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.